Friends, in this video, I am going to be sharing the best ways of using trend lines to successfully trade the markets. But before we start, be sure to subscribe to our channel so you don't miss on our new videos. Firstly, let us understand what is trend line and how does it work. Just like support and resistance levels, trend lines are the lines that show potential areas of price reversal. The only difference between the support resistance levels and trend lines is that support levels are horizontal lines while the trend lines are slope lines. In uptrend, we can see the trend lines are sloped upwards. Equally, in a downtrend, we can see that the trend lines are sloped downwards. But the big question here is how to draw a trend line. Drawing trend line is easy, but when you are starting out, it can be crushing. Hence, I have created 3 rules for drawing the best trend lines. Rule number 1 is only look at the major swing points. Now, look at this chart. Here we can see that the price is in uptrend. Now, here are the potential trend lines that could be drawn. But when we have so many trend lines plotted on the same chart, it becomes really difficult to trade. We need a more clear chart. So let's start over again. This time let us first identify the major swing points on the chart. Here are the major swing points. Now we will plot a trend line by connecting these swing points. It is that simple. We will only look at the major swing points. When we are creating the trend line, most of the time the best trend lines are the pretty clear. Straight away, the second rule of drawing trend line is that you need at least 3 touches to confirm the trend line. I have seen many traders saying that you need 2 touches to confirm a trend line, but think about it logically. You can pick up any 2 points on the chart and create a trend line, but when there are 3 points that fall in a straight line, it becomes a confirmed trend line. Hence, I always look for at least 3 touches to confirm a trend line. The third and the last rule of drawing trend line is that sometimes we have to use 2 parallel lines to properly draw the trend line, just like support and resistance. Trend lines are areas of possible reversal. This means we cannot expect the market to reverse exactly at the trend line. Sometimes the market can reverse before hitting the trend line. On the other hand, sometimes it may go beyond the trend line before reversing. Hence, we need to think of trend lines as an area rather than a line. Look at this chart. We can clearly see that there are 4 swing points. Our job is to create a trend line. The problem is that if we connect point 1 and point 3, we will miss point 2 and point 4. To solve this problem, we will create a channel. In other words, we will draw a second trend line to connect the second and fourth point. Now, the area between the price channel becomes the area of support. Hence, we can expect the market to reverse after entering this area. If you follow these 3 rules, you will be able to plot the trend lines with high accuracy. In the beginning, you might find it difficult, but as you keep on practicing, you will master the trend lines very soon. Now, let's see about the strategy. The first strategy is trend following strategy. This means that we will try to catch up moves in an uptrend and catch down moves in downtrend. In other words, we will try to enter the trend on the pullbacks. In order to achieve this, we will use the trend lines in conjunction with support and resistance levels. Let us look at an example to understand this strategy. Here we have the 15 minutes chart of Euro USD pair. Here we can see that the price is making higher highs and higher lows. Hence, this is an uptrend. This means that we only look at buying opportunities. The first step is to plot the trend line. We will do so by connecting the major swing points. Here are the major swing points. We connect these swing points to create the trend line. Now, as the price moves on, we see that the pair has reached the trend line. Again, as I said earlier, there is a possibility that the price will reverse after touching the trend line. Now, if we look closely, we can see that the price is at a level which has acted as a support before. This also signals that the price could reverse after touching this area. This means that in this area there is a high convergence between the trend line and the support levels. Hence, we should buy the pair at this level. Now, to enter the trade, we will wait for any type of candlestick formation to trigger our entry. Here is our entry trigger. Here we see a bullish pattern and we buy at the close of this candle. We will keep our stop loss below the trend line and we can keep our target as 2:1 risk reward ratio. And as you can see, the price reached our target. Let us now look at a sell trade. Here we can see that the stock is in a downtrend as it is making lower highs and lower lows. So we identify the swing points on the chart and mark the trend line. Now look at this point. After making a good down move, the price has pulled back at the trend line. So there is a possibility that the price might reverse after hitting the trend line. At the same time, we can see that the area overlaps with major levels of resistance that has acted as a support before. This also signifies a strong point of resistance. Therefore, we can say that this area has a convergence of trend line as well as resistance level. So we accept the price to resume the downtrend after hitting this level. So we wait for a bearish candlestick pattern to appear. As you can see here, two bearish hammer candles appear in quick sequence. This is a perfect opportunity and we sell the stock here. We keep our stop about the trend line. Afterward, we keep our target as 2:1 risk reward ratio. And as you can see, the market gave a sharp sell off after our entry. I hope you liked the video. In return, I just ask you to subscribe to our channel so that you don't miss our upcoming new videos. Thank you for watching.